Hey there, fellow taxpayers. Budget 2025 is here, and it's brought some big changes, especially when it comes to your hard-earned money. The biggest news? If you earn up to 12 lakh rupees a year, you won't pay a single rupee in income tax. That's right, you heard it here first. This change is part of the government's new tax regime, designed to put more money in your pocket. But hold your horses. Before you start planning that dream vacation, let's break down exactly what this means for you. We'll unpack all the nitty-gritty details of the new tax slabs, compare them to the old system, and help you figure out which option is right for you. Stay tuned, folks, because things are about to get financially interesting. Alright, let's get down to brass tacks. Today, we're diving into the nitty-gritty of the new tax regime. It's a topic that might seem dry at first, but trust me, understanding it can save you a lot of money and headaches down the line. So let's break it down step by step. The new tax regime introduces revised income tax slabs. These slabs are essentially different levels of income, each taxed at a different rate. The idea is to make the tax system more streamlined and hopefully more beneficial for taxpayers. Think of these slabs like different levels in a video game, each with its own tax rate. Just like in a game, as you level up, the challenges, or in this case the tax rates, increase. Here's how it works. 0 to 4 lakh rupees. You pay a big fat zero. That's right, no tax on this portion of your income. It's like the tutorial level in a game, easy and straightforward. This is great news for those who are just starting out or have a lower income. You get to keep every rupee you earn up to 4 lakh. 4 to 8 lakh rupees. You'll pay a modest 5% tax on this income. It's a small step up, but still quite manageable. 8 to 12 lakh rupees. This slab comes with a 10% tax rate. As your income grows, so does your tax responsibility, but it's still within a reasonable range. 12 to 16 lakh rupees. The tax rate goes up to 15%. Now we're getting into more significant territory, but it's all part of the progression. 16 to 20 lakh rupees. You'll pay 20% on this portion of your income. This is where you start to feel the pinch a bit more. 20 to 24 lakh rupees. The taxman takes a 25% cut. It's a significant chunk, but remember, you're also earning more. Earning over 24 lakh rupees, you'll pay the highest rate of 30%. This is the top level, where the tax rate is the steepest. Remember, these slabs only apply if you choose the new tax regime. It's an option, not a mandate, so you have the freedom to decide what's best for your financial situation. We'll get to the old system later. Stick around. There's a lot more to cover, and understanding both systems will help you make an informed choice. Now let's talk about that magical 12 lakh rupees figure. How does the government make it tax-free? Well, it's all thanks to something called a rebate. Think of it like a discount coupon on your taxes. Let's say you earn exactly 12 lakh rupees a year. The government gives you a rebate of 80,000 rupees. This rebate reduces your taxable income, making it as if you earned less than 12 lakh rupees, and bam, you pay zero income tax. It's like magic, but with less smoke and mirrors and more boring tax jargon. For those of you with salaried jobs, this rebate effectively makes your no-tax limit 12.75 lakh rupees, thanks to the standard deduction. That's even more money in your pocket. Now, before you go on a spending spree, there's something you need to know. This shiny new tax regime isn't replacing the old one. Nope, the old system is still alive and kicking like that cockroach you just can't seem to kill. The old regime has its own set of tax slabs and a whole bunch of deductions and exemptions. These deductions are like bonus points you get for things like investing in specific schemes or having certain expenses. We're talking about things like house rent allowance, medical insurance, and even donations to charity. So, while the new regime might seem tempting with its zero tax promise, don't write off the old system just yet. Section 5, New versus Old, Who benefits? This brings us to the million-dollar question, which tax regime should you choose? It's a decision that can significantly impact your financial health, and it's not one to be taken lightly. The choice between the new and old tax regimes can be as perplexing as solving a complex puzzle. Well, my friend, the answer is like a box of chocolates. It depends on what you like. Just as each chocolate has a different flavor, each tax regime offers different benefits depending on your financial situation. Or, in this case, it depends on your income and how many deductions you're eligible for. The old regime allows for a plethora of deductions and exemptions, which can be beneficial if you have a lot of eligible expenses. If you're someone who doesn't have a lot of deductions, the new regime could be your golden ticket to tax savings. It's simpler and more straightforward with lower tax rates but fewer deductions. Imagine earning 16 lakh and only having 4 lakh worth of deductions. In such a scenario, the new regime's lower tax rates could result in significant savings. The new regime would save you a cool 50,000 rupees in taxes compared to the old one. That's a substantial amount that could be used for other financial goals or investments. However, if you're a high earner with a laundry list of deductions and exemptions, the old regime might still be your best bet. The ability to claim multiple deductions can lower your taxable income significantly. It's all about doing the math and figuring out which option puts more money back in your wallet. Take the time to analyze your financial situation, consider your income, and list out all possible deductions. Consulting with a tax advisor can also provide valuable insights tailored to your specific circumstances. Remember, the goal is to maximize your savings and minimize your tax liability. So choose wisely and make an informed decision that aligns with your financial goals. Section 6. Why the change? Now, you might be wondering why the government decided to shake things up with this new tax regime. Well, it's all part of their master plan to boost the economy. You see, by putting more money in the hands of the middle class, they hope to encourage spending. And when people spend money, businesses thrive and the economy grows. It's a win-win situation. Of course, higher earners benefit too, though maybe not as dramatically. But hey, every rupee saved is a rupee earned, right? Section 7. Real-life examples. How much you save. Still not sure if switching to the new tax regime is right for you? It's a common dilemma many face when considering financial changes. Let's look at some real-life examples to help you make an informed decision. These scenarios will give you a clearer picture of potential savings. Imagine you're a young professional earning 16 lakh rupees a year, like we discussed earlier. This is a common scenario for many fresh graduates and early career professionals. With the new regime, you could save a whopping 50,000 rupees in taxes. That's a significant amount, especially when you're just starting out. That's enough for a fancy vacation or a down payment on a new car. Imagine the possibilities: a relaxing getaway or driving your dream car. Now let's say you're a seasoned executive raking in a cool 50 lakh rupees annually. This is a scenario many experienced professionals find themselves in. The new regime could save you a staggering 1,10,000 rupees in taxes. That's a substantial saving that can make a big difference. That's enough to hire a personal chef for a year, or finally take that around-the-world trip you've always dreamed of. Think about the luxury and experiences you could enjoy. Of course, these are just examples. Everyone's financial situation is unique, and your savings could vary. Your actual tax savings will depend on your individual circumstances. Factors like your income, deductions, and financial goals all play a role. But you get the idea, right? The potential savings with the new tax regime can be quite significant, making it worth considering for many. Section 8. Confused? Here's how to choose. Feeling a little overwhelmed by all this tax talk? Don't worry, we've got you covered. Here's a simple way to decide whether to stick with the old tax regime or switch to the new one. First, calculate your taxable income under both regimes. This means considering your income, deductions, and exemptions. Next, compare the tax you would pay under each regime. Finally, choose the regime that results in the lowest tax liability. It's as simple as that. You can also use online tax calculators or consult with a financial advisor to help you make the best decision. Section 9. The last word on Budget 2025. So, there you have it, folks. Budget 2025 has brought some significant changes to the income tax landscape. While the new regime with its zero tax promise is undoubtedly appealing, it's essential to weigh your options carefully and choose the regime that works best for your financial situation. Remember, this is your hard-earned money we're talking about. So take the time to understand your options, make informed decisions, and keep more of what you earn.